every Monday to Friday. This is Peter Lewis's Money Talk.
Money Talk.
Good morning, this is Peter Lewis. A warm welcome to Money Talk on Thursday the 19th of October. This podcast is sponsored by Surfing Group, which is headquartered in Singapore and offers online financial services to 30 million customers across 10 countries. In today's business and finance headlines, China's GDP grew 4.9% year on year in the third quarter, beating market expectations and picking up from the previous 3 months. Economists had predicted third quarter year on year growth of 4.5%. The figure from the National Bureau of Statistics compares with GDP growth of 4.5% in the first 3 months of the year and 6.3% in the second quarter. China's retail sales climbed by 5.5% year on year in September, accelerating from a 4.6% gain in the prior month and exceeding economists' estimates. It was the largest increase in consumer expenditure since May and the 9th consecutive month of increases in consumer expenditure. President Xi has unveiled a new 8-point Belt and Road Action Plan and pledged the equivalent of $107 billion over the next 5 years into infrastructure projects. In a keynote speech in Beijing, President Xi defended his flagship Belt and Road Initiative, casting the $1 trillion program as a driver of global growth, while saying that those that view it as a threat are doing themselves a disservice. Treasury yields rose to their highest level in 16 years as investors weighed up signs of US economic resilience and the possibility of higher interest rates. Benchmark 10-year Treasury yields rose 7 basis points to 4.91%. That's the highest since 2007. 30-year Treasury yields rose 6 basis points to 5.01%. Also notably, the 5-year Treasury moved as high as 4.94%, its highest level since 2007. JP Morgan said its clients have suggested the Fed may need to raise rates to at least 6% to sufficiently cool the jobs market and ease consumer spending. On today's Money Talk, I'm joined by Andrew Freris, the CEO of Ecognosis Advisory, and with a view from Taiwan is Ross Feingold, Business Development Director at SafePro Group. And if you want to get in touch, please go to my website, peterlewismoneytalk.substack.com. I'm also on Facebook with the same page name, Peter Lewis Money Talk, and on X, I'm at Money Talk R3.
Peter Lewis's Money Talk.
On Wall Street, US stocks fell on Wednesday as Treasury yields surged to new multi-year highs. Global stock markets were also rattled on Wednesday after an explosion at a hospital in Gaza threatened to derail diplomatic efforts to de-escalate the war between Israel and Hamas. The S&P 500 was down 1.3% at 4,315, with materials, industrials and consumer discretionary the worst performing sectors. The Dow slipped 333 points, or 1%, to finish at 33,665. The Nasdaq Composite fell 1.6% to 13,314, with all of the magnificent 7 big tech stocks weakening. At one stage, the VIX Volatility Index rose above 20 before settling 7.5% higher at 19.22. Crude oil prices jumped on Wednesday as the escalating violence in Gaza raises concerns about supply disruptions elsewhere in the region. Brent crude rose as much as 2.5% in Asian trading Wednesday before slipping back in New York slightly to $91.32 a barrel. That's a gain of 1.6%. Spot gold prices rose to their highest level since July on Wednesday as concerns over the escalating conflict between Israel and Hamas buoyed demand for safe haven assets. Gold added as much as 1.4% to reach $1,949 an ounce. The dollar was firmer on Wednesday, with the dollar index printing a high of 106.63 before closing 0.33% firmer at 106.56. The offshore Chinese yuan slipped to 7.3271 renminbi as bullish Chinese economic data and various banks upping their 2023 GDP estimates was overshadowed by Country Garden's missed coupon payment. Hong Kong's Hang Seng Index edged down by 41 points, or 0.2%, to 17,733, giving up gains of 1% earlier in the session. The tech index tumbled 1.7%. Mainland markets were also lower. The Shanghai Composite dips 0.8% to 3,059. Looks like we're going to see a further slump in Hong Kong stocks at the open. Futures markets pointing to a decline of about 230 points. That's 1.3%, putting the index on track to open at 17,500 level. You can get more details on the latest market movements in my daily newsletter at peterlewismoneytalk.substack.com.
Every Monday to Friday, this is Peter Lewis's Money Talk. Peter Lewis's Money Talk.
And I'm delighted to welcome on this Thursday morning our regular Thursday guest, Andrew Freris, who is the CEO of Ecognosis Advisory. Good morning to you, Andrew.
Hi, good morning.
Let's start with some of this data, our big data dump out of China yesterday. First of all, GDP grew 4.9% year on year in the third quarter. That beat market expectations and picking up from the previous 3 months. Economists had predicted growth of 4.5%. The figure from the National Bureau of Statistics compares with year on year GDP growth of 4.5% in the first 3 months of the year and 6.3% in the second quarter. The economy expanded 1.3% on a quarterly basis after growth of just 0.5% in the April to June period. Economists had been expecting quarterly growth of 1%. Andrew, a surprise?
Not really, actually. I must admit, in the case of China, I had given up the spirit to the extent that I was not expecting to see a recession. Okay, meaning what? That it will grow negatively on any quarter? Absolutely not. And I thought, they might just be able to make the 5%. And the rest of the numbers were a variation from stable to minor movements up and down. And hence, I call the Chinese economy the malaise economy. You know, the kind of thing people ask you, how do you feel today? And you say, yeah, not that good. Okay, yeah, I hope it gets better, kind of thing. So this, in fact, confirms that. And I'm absolutely delighted because it does mean that there will be very easy for them to hit the 5%, which is meaningless, but it is important politically. Okay, they don't slip down. And things like investment, retail sales were slightly better, okay, as was industrial output, which means that the economy is not doing great, but most definitely is not doing badly. So now let's move on from China, okay, because it's not going to grow. There's obsession with deflation in China. Oh, for God's sakes, you can't have everything okay. In other words, everywhere else is inflation. In China, inflation rate is below 1% on a CPI basis, and that's bad news. Well, why? At least the Chinese don't need to worry about inflation. You know, they will have 5% GDP growth with next to below 1% inflation. You know, other countries will give their right hand to get this. Look at the UK. Okay, the Bank of England says, well, we're not going to move. We increased interest rates 14 times since last September and 5.25, if I remember well. We're staying there. The same thing with Fed. Why? Because inflation is not beaten yet. So China overall, it is doing, and again, I will use a slightly onomatopoetic, that's a nice Greek word for you, a nice sound of how it is doing. I would say, yeah, okay.
It is easy to be too gloomy, isn't it, about the Chinese economy? And maybe that's been a fault of a lot of economists. They just have been too gloomy. And even, you know, before this figure, growth of sort of over 4% is not bad anyway, is it? But as you say, it looks like, you know, all we need, I think, is growth of about 4.6% now in the final quarter, and they hit the 5% targets.
And thank God we have stopped now saying that all the Chinese statistics are cooked. You know, back in my years with Salomon Brothers in the 1990s, the place was crazy enough to give me money to employ a group of Chinese academic economists and a group of economists in Hong Kong. Remember, that's a long time ago. And their remit was specifically how good or bad the statistics were. And the answer is they were good enough for you to make decisions on. And in these days, even the Chinese themselves admitted that, for example, GDP growth rates taken on a provincial and then on a sum total base, they just didn't click together. In other words, the provinces in general overstated. Well, all this is safely behind us now. So, you know, I look at the numbers and I say this is as good as it's going to get, in the sense that it doesn't distort anything. Okay, and it's very important also to understand that even in the political setup of China, it will be lethal to distort the numbers purposefully. Okay, it will be suicidal. I mean, so whatever political benefits would have been there, okay, they would have completely gone out of the window by simply putting a compass that tells everybody else where the economy is not going. So what I'm actually saying with these numbers, okay, I'm quite happy to say that we're looking at perhaps a 5%. And yes, I have full faith on what I read the Chinese numbers to be, because I think they have to reflect reasonably what the economy is doing. It's absolutely impossible to lie consistently. Impossible. I was also an expert at one stage on Soviet statistics, but this was Soviet Union in the 1930s. And they were acutely aware that they were distorting the statistics on purpose, and they knew they were really doing incredible damage to themselves. I mean, but this was all, now we know it. With the collapse of the Soviet Union, we know what they were telling amongst themselves. So now I buy with a pinch of salt. The only place that has purposefully distorted their statistics, and they actually tried to imprison some journalists when they blew the whistle, was good old Argentina, my favorite place. And this is the statistics on CPI, where nobody ever believed them. Okay, but anyway, they're going to have elections now, and very likely they're going to elect quite a maverick.
He's going to de-dollarize, isn't he? He's talking about
everything. He wants to take a bulldozer to social services. I love this expression.
What was interesting is actually Argentina's just borrowed $6.5 billion from China. I love the way the president turns up at the Belt and Road Summit, taps President Xi on the shoulder and says, "Can I have $5 billion?" And he says, "Of course you can. In fact, make it $6.5 billion. We're good friends." I mean, if that's how it's done, I'm not surprised so many people have gone to Beijing for this summit.
That, however, is the Peronist president, because the guy which is likely, I'm not saying to be elected, is bitterly anti-Chinese. Okay, he actually said, "I will have absolutely nothing to do with Belt and Road. I will have absolutely nothing to do with money from China." Let's not forget Bolsonaro, okay, the ex-president of Brazil, tore up practically every single piece of paper that had Belt and Road written on it. Okay? So in other words, whenever the Chinese, rightly, they are proud of what they are doing, there was one particular bit in Latin America that it just didn't drive. Again, in other words, people said, we really don't want to do anything to do with it, which doesn't mean anything. It means a political situation. But watch out for Argentina now.
Okay, well, we'll get on to the Belt and Road in a minute. Let me just get back a bit to the economic data. There's been a lot of talk about what's important is not just the GDP growth, but the quality of growth. This is the sort of the phrase that President Xi and government ministers use a lot as well. It's hard to know what exactly they mean by quality of growth, but I presume it means making sure that investment goes into productive areas rather than some of these non-productive investment areas under all these soft budget constraints, which are eventually going to get reversed. Are you seeing, as well as absolute growth, are you seeing an improvement in the quality of growth?
Well, look, this is a negative positive, whatever that means in English. Again, and that is on the fixed income investment. We had, if I remember well, it was flat. August, these are all cumulative, it was 3.2, and in September it was 3.1, okay, over the 9 or the 8 month period. But investment in property was a negative 9.1. Well, all right, I consider this to be a compliment, because you don't want to be investing in property. So at least if it is still flat and one part of it has come down, then by extension, all the other bits, given that the numbers are flat, must have increased a little bit. Okay, and all the other bits are the good investment. It sounds like cholesterol. I don't know if you know this, because my wife is a doctor and she always kills herself laughing and implies that this has a good economic application. There is good cholesterol and bad cholesterol. And what matters is the ratio of the two. It's not how big or small your bad or good is, the relationship between the two. And hence, said he, taking a deep breath and overdrawing the parallelism, the answer is yes, this is a sign of a good quality. Overall, fixed investment stays the same, and part of it, which is bad, okay, investment in property has come down, which means for the level to stay the same, everything else must have gone slightly up.
So this data, it does show, doesn't it, the problems still in the Chinese economy, which is really the property sector. That's the weak link there. As you say, the investment in real estate declined 9.1%. So it's falling faster, because it was 7.9% in the first half of the year. Housing starts are down more than 20% so far this year. This is the weak link still, isn't it, in the economy?
Absolutely, that's the good quality of investment. In other words, you don't want this to happen. You want your overall investment to stay at least flat or not to decline, and you want the bad investment, whatever that means. Okay, you want the investment in the property sector, which is suffering, not to increase, and actually, if anything else, to decrease.
And what we're seeing is debts go up as well. Now, I know you don't like the debt to GDP ratio for all the reasons we've talked about before, but one thing that I do find what it does tell you is that if debt to GDP is going up, it means that this debt is not going into productive areas of the economy, because if it was, that denominator would go up as well and the ratio would stay the same. So it suggests that there's still this problem of financing going to the wrong areas, doesn't it?
Yeah, Peter, you've been a little bit naughty here. What you say is, let's say, true, but wrong for a lot of other different reasons. The way in which this is normally looked is to say, for every addition of X to investment, what is the addition to GDP or not? And in China, this has been falling. Again, the productivity of investment. So I will leave the ratio aside because it is misleading, and I will take something that it is not misleading, it is leading. and that is the productivity of investment, which is in China has been declining. Okay, and this is quite an issue.
Yeah, well, that's what we're seeing, though, isn't it? That we're seeing that, this debt is being used. You would expect about 5 to 6% GDP growth given the amount of debt, but we're not seeing anything like that. So it does suggest that it's an awful lot of debt for little growth. Well,
yeah, and the answer for that, again, Peter, you're a big naughty boy. The majority of the debt, the majority of the incremental debt has gone into property. Yeah, of course. So it's not surprising it's not adding anything.
Yep. Now, on some of the other data, on retail sales, that was also a positive number. Retail sales climbed 5.5% year on year. That was up from 4.6% gain in the prior month, exceeded economists' estimates of 4.9. Biggest increase in consumers' expenditure since May. So are you seeing signs here that maybe the consumer is back and we've written the consumer off too early in China?
I want to know the leap on that. Now, I don't have the numbers in front of me, and I don't want to guess, but I will guess we have a low base effect, and also we have the effect of the golden week, and possibly some of the after effects of Chinese New Year. So, in other words, yes, the consumers did spend, but I want to see if this is going to be maintained.
And look at what the consumer spent on the biggest item, tobacco and alcohol sales, up 23.1%. They were obviously being pretty sinful, weren't they, over the last month?
Well, I like that. I'm a great fan, in inverted commas, of defense spending. And people say, Andrew, this is horrible. And I said, yes. You don't want to spend money on something that kills people, so we'll turn instead to alcohol and tobacco.
Yep, that's what seems to be happening. So, okay, let me turn to the Belt and Road initiative, because that's the other big thing going on at the moment. It's the Belt and Road Forum taking place in Beijing, finished yesterday, celebrating the 10th anniversary of the Belt and Road initiative. President Xi was defending his flagship policy. He says the $1 trillion program has been a driver of global growth. He says those that are viewing it as a threat are doing themselves a disservice, and he's also pledged the equivalent of basically $107 billion over the next 5 years into the project, which is pretty well matching the commitment that was given back in 2017. And he announced an 8-point vision for the infrastructure scheme to support what he called high-quality Belt and Road cooperation. If you look back, Andrew, over the last 10 years, has it been a success? Has it helped global growth?
I'll split my answer in two parts. First, I will defend China against the accusation that they're doing it for political reasons. Of course they do it.
Yeah.
Why shouldn't they? They're not the only one. Oh, come on. Nobody that turns around and expects that countries are going to be philanthropists. I'm a great believer in what de Gaulle said very coldly and quietly. Okay, countries do not have friends. They have interests. Yeah, of course. So China is doing because it expects, to be a soft way of increasing its influence and its interest. Now, is that the best way of spending the money? And given the cacophony of criticism about the way in which the loans were used, then one can split the answer. One can be negative on China, see, you lend money to these people and they misspend it, and the other part, it can be, again, positive and say, well, it is the countries that they misspend the money, not China. So in other words, perhaps the Chinese control over how the money was being spent. And I'm thinking of, for example, of Sri Lanka, where there was a major, the whole project had to be renationalized kind of thing because they could not repay back the loans. And we have the same thing with several of the railway projects in Africa. But this is not necessarily badly spent money, but perhaps badly spent money by individual countries. But of course, China cannot turn around and say, yes, we gave money to A, B, C, and D, and they're pretty dreadful in the way in which they abuse their money. They can't. Okay, so they have to defend the position that this is good infrastructure spending. So plus, minus. Okay, I definitely do not accuse China of using money for its political influence. Of course, it should. They will be stupid if they don't do that. Now, is that the best way of having soft policy approach? The answer is I don't know, because some of the notions were a little bit grandiose. For example, in Latin America, and this was quietly thrown away, was a railway that will join the Atlantic with the Pacific Oceans, and it runs straight through the Amazon jungle. Well, that was a little bit provocative in terms of climate control and in terms of maintenance of that incredible forest. Anyway, so in sum, I'm observing it with great degree of interest. I have taken on board all the criticisms and all the issues about money not being spent properly, and the fact that even some not all that politically influenceable international institutions said that it has now driven some of the countries to be excessively indebted to China, and China is not there to hand the money out. So, I'm not surprised that they say we want our money back, and we want interest and we want repayments. Of course, otherwise this is philanthropy, and that's not meant to be philanthropy.
Well, where does it go for the next 10 years? Because they can't spend at the sort of rate they have been spending now, have they? Because they've got a lot of domestic issues that need a lot of money as well, not least a bankrupt property sector. There's going to have to be a choice here.
And I have no idea if the average Chinese person listening that we will be giving another 100 billion to these far off and distant countries to make to build up their railways. Why don't we keep the money at home? And the answer is this is part of foreign policy. This is the criticism of that has to be done on the basis that China chose this particular way to extend its influence. That's perfectly right. I think, it will be completely hypocritical to say otherwise. To say, how can they do this? I mean, look at the States. Look at Biden also has now his own Belt and Road project that also involved the word 100 billion over X time period, and this is to counter the influence of China. Well, that's a kind of a compliment, if you want to. Yeah.
Well, and now you said countries don't have friends; they have interests. Where does Vladimir Putin fit in? Is he a friend, or is he an interest of China?
Well, the consensus seems to be, and I'm afraid I do subscribe, is that the friend of my enemy is my enemy, and the enemy of my friend is my friend, is not perhaps necessarily the best way of doing this. And for me, in the case of China, my continuous concern was that this could be turned against China when it came to Taiwan. Because after all, Putin said, part of Ukraine belongs to Russia. It is a Russian part, and therefore we're going to invade and take it over. And I'm not quite sure if people will say, well, is China trying to tell the world that what they have actually repeatedly said, that we will try everything possible, but we cannot exclude the possibility of occupying Taiwan, is part of it. And I thought that was not necessarily the best way of doing this. In other words, it should be very important to keep the two things separately. The claim of China on Taiwan has absolutely nothing to do, historically, politically, economically, with the claim of Putin on Ukraine. And automatically people will do this because it will be a very convenient stick to hit China on the head with. And that's why, Putin is a little bit like the drunk uncle that turns up invariably at Christmas dinners. And you have to have him in, but it's not possibly the best guest you want to have.
I mean, China, President Xi didn't mention the no limits this time when talking about the friendship, but nevertheless, the cost to China has been large of this friendship, particularly with the EU, hasn't it? Because it's really ruining its relationships with the EU, and who are one of its biggest trading partners, because of this cozying up to Russia.
Yeah, well, it's far be it from me to lean over and whisper advice to the ear of the Chinese foreign minister or to President Putin. It is simply seeing where the cost and benefits are. In other words, one has to be incredibly cold about this. Yes, you can go to bed with some very strange bedfellows, but the cost-benefit analysis sometimes leave people like me with my eyebrow raised. Okay, so China has every right to spend piles as they do on defense. Of course they do. Look at the States. So how can I possibly turn around and says they have increased their budget this year, I understand, by something like 9% of defense spending. So they should. If you're not well armed, nobody listens to you. It's as brutal as that.
Let me finally ask you, where does Hong Kong fit into this? John Lee also spoke at the Belt and Road Summit. He says Hong Kong's going to grow into an I&T hub to complement the Belt and Road Initiative, and is going to work to develop Hong Kong as an international hub for innovation and technology in line with this 8-point plan that President Xi set out. Do you agree with that? Is that?
Yeah, actually, it is consistent with what Hong Kong has been saying about the Greater Bay Area integration. And Peter, actually, I must pat myself in the back. I must be one of the few living, let's say, experts on the Great Bay Area, because when one tries to dig out concrete issues and concrete developments, it is not easy. Okay, and at least here there has been a great degree of consistency as to what Hong Kong has been saying and what they have been trying to do. And that is to carry on building, let's say, areas of excellence. Okay, that spread now in the Northern Metropolis expansion that has huge science parks involved into that, but also geographically and functionally linked with science parks in China, in the Greater Bay Area, and not just in the SAR. So what John Lee actually said makes a lot of consistent sense. Okay, in other words, I didn't say, oh no, here we go again. We're going to spend money on technology. We have been spending money on technology, and it has been done, I reckon, in a consistent manner.
Okay. Well, Andrew, always good to hear your thoughts on a Thursday morning. Thank you very much for that, and enjoy the long weekend that's coming up here in Hong Kong. That's Andrew Freris, who is the CEO of Ecognosis Advisory. I'm joined now by Ross Feingold, who is Business Development Director for SafePro Group over in Taiwan. Very good morning to you, Ross.
Good morning.
The Belt and Road Summit, President Xi Jinping has outlined a new 8-point Belt and Road action plan, defending his flagship projects, casting the $1 trillion program as a driver of global growth, and also pledging to put in another $107 billion over the next few years into the projects. What do you make of the Belt and Road Initiative? Has it been a success? Has it done what it said it was going to do on the tin?
It's had its successes and failures. Obviously, they spent a tremendous amount of money, and there's something there. There is a lot of infrastructure that has been built around the world, and China or Chinese companies can make use of it. Of course, in recent years, the negative publicity, has been enormous, and debt traps, is the word that is frequently used to describe some of the countries' situation. They've built airports or ports that they don't need or can't afford. The payments are beyond the means of some of these countries to return, and China might not get all its money back from some of those loans, or it might have to step in and operate the assets, which might not be as productive as originally envisioned. So it's a mixed report card, I would say, but the fact that they could have this forum and so many countries are attending, I think that goes to the first part of what I said, that there is something there, and that means it's not a total failure.
And I suppose it is impressive that you can get so many presidents and high-level officials from so many countries, 140 countries gathered. I don't think the US or Europe could do that, could they?
Probably not. And of course, they recently launched their competing plan to go from Europe through Saudi Arabia and then to India. But that plan is still in such early days. So, not only the role of the main backers of that plan remains to be seen, but more importantly, what is the benefit for other countries? Again, it bypasses or crosses, I should say, so few countries, unlike the Belt and Road, which, as you said, 140 countries are attending the forum because they're involved in it. Plans for the Western version, the democracy infrastructure plan, really remains to be seen how successful that'll be.
But I'm wondering how many of those countries' delegates turned up basically in the hope of getting some more money, as happened with Argentina. I mean, President Fernandez turned up, tapped President Xi on the shoulder, said, "Can I have $5 billion, please, before Sunday?" And President Xi said, "Yeah, in fact, make it 6.5. Why don't you, as we're good friends?" It seems, if that's what's going to happen, I'd fly to Beijing as well straight away.
Well, sure. People don't turn down free money. It's borrowed money that might be a concern. So, of course, to the extent that China is offering grants and its opportunities for Chinese companies to do the construction, countries are on board with that. The fact that it wasn't always local companies or local labor building out the infrastructure, that clearly has not been a deal killer for many of the countries that do have Belt and Road projects.
Well, where does Taiwan fit into the Belt and Road, or does it at all? Is it just completely peripheral to the Belt and Road initiative?
I'd say at the moment it's peripheral to the extent that obviously China is not paying or hasn't lent any money to Taiwan to build Belt and Road infrastructure here. But on the other hand, to the extent that Taiwanese companies are still manufacturing in China and exporting from China to markets around the world, then of course, like any other exporter in China, they would stand to benefit.
Does Taiwan want China to invest in some of its infrastructure? I mean, presumably if it does, it would be a good way, wouldn't it, for China to actually develop better relations with Taiwan?
Yeah, at the moment, I don't think there's political appetite here in Taiwan for any Chinese-funded infrastructure. In fact, when the Democratic Progressive Party took over in 2016, both the majority in the legislature and the presidency, one of the first things they did was launch a big infrastructure building plan, spent a lot of money on it. So I don't think Taiwan really wants for the kind of infrastructure like ports or roads that the Belt and Road is known for.
Where does the Belt and Road go from here over the next decade? It's at the end of the first decade now. I presume that China can't lend the sort of money over the next 10 years that it was doing over the first 10 years, not least because it's got some domestic priorities it needs to sort out and is also making a claim on the money, like the bankrupt property sector.
Well, where they go from here is, again, probably try to collect some of those debts. So that the whole debt trap diplomacy thing, it remains to be seen how that plays out and how many countries at some point turn into Sri Lanka, where they couldn't afford to pay back the loans for building a port, and then China steps in and takes over the control of the operations. So if they're not going to be building as much, then they're in the next few years, then again, what to watch for is use of these assets and how many of them make money and how many of them don't.
But they're not going to cancel the debt, are they? They've made that very clear. So, there's going to have to be a lot of restructuring going on in some cases.
For sure. And maybe there'll even be some litigation. So maybe some work for lawyers.
Okay. Let's turn our attention to international things. President Biden flew into Israel for a short one-day visit. Very big gamble, isn't it? It's almost unheard of for an American president to fly into a war zone like that. Has the gamble paid off?
A little bit, in the sense that Israel enjoys enormous political support in the United States Congress and in the public. There's been some polls in recent days that were released that show there's very wide public support for providing military assistance to Israel at this time, as Israel goes to war against Hamas and possibly against Hezbollah on the Lebanon border. So to the extent that the public and the Congress are on board with this, and Biden going was to show U.S. support. I think politically, it seems for now that it was the right move. There'll probably be some assessments of his personal performance, in the sense that there are going to be people who say he slurred his words, or he looks so old and exhausted. So there'll probably be some of that as well, or criticism of what specifically he said during his speech last night, Taiwan, Hong Kong time. But to the extent he went and showed U.S. support, I think that's going to be a plus.
But he's ruined his relations with the Arab world, hasn't he? The Arab leaders have cancelled their meetings with him. That's been quite a big snub, and it looks like it's just exacerbated the divide now across the Middle East.
Well, in recent years, there's been so much discussion about the U.S. exiting the Middle East, and it's going to be focusing on the Indo-Pacific. And yes, the U.S. has put more resources into the Indo-Pacific, whether that's military or investment, the IPEF, non-free trade agreement trade deal, and things like that. But I always like to say that the U.S. has not left the Middle East, and not only does the U.S. still have troops on the ground in places like Iraq and Syria, or have a large naval operations in the Persian Gulf, but the time that the U.S. government spends on the Middle East is still extensive. We still see Middle East countries like Saudi Arabia. They want the U.S. to make a deal that would facilitate recognition of Israel, but in return, Saudi Arabia was asking for U.S. to provide security guarantees, as well as to build civilian nuclear power plants. So, they might be mad at the U.S. at the moment. Part of that, it appears, is built on a faulty assumption that Israel was responsible for this tragedy at the hospital, where in fact, it increasingly looks like it's Islamic Jihad that was responsible for that it was one of their rockets that malfunctioned.
Do we know that? Do we know that? No, I know Israel says that, but and the Hamas denies that, or the Palestinians deny it. But do we know the truth yet of what actually happened there?
The evidence is increasingly looking that way. It's just from the technical perspective, as Israel has explained, and the U.S. seems to be backing Israel up. This just does not seem like the damage that would be caused by the missiles that Israel has typically been using during the 10 days of bombing. So I think what we're going to see is the Arab countries that need the U.S. for various things, whether trade or security, they're going to move on. So I don't think there's going to be long-term damage to the U.S. relationship with some of the Arab countries over the specifics of the hospital incident. Are they going to be angry that the U.S. is supporting Israel? Yes and no. And I say yes and no because no one wants to see the civilian deaths and injuries that has occurred in Gaza. But are the other Arab countries happy that Israel is probably going to destroy Hamas? The answer to that question is yes. So whether that's Egypt or the Persian Gulf countries, they are perfectly okay with the elimination of Hamas.
Okay. Now, President Biden's committed a lot of money to Israel to help them fight this war, but I presume that's delivering on that is very dependent upon whether or not we can get a House Speaker, and at the moment it doesn't seem very likely, does it?
No, it doesn't seem likely based on the vote a few hours ago where Jordan lost again and lost by more votes than the first day. But the political will seems to be there once they could figure out how to move it. There's been some talk about giving this Speaker pro tempore the power to move this legislation. So that might be happening in the next few days. But the political will across the aisle, Democrats and Republicans, it seems to be there to provide billions of dollars in aid to Israel. And as has been discussed quite openly, there's a possibility that it's going to be a large bill that encompasses aid not just to Israel, but to Ukraine as well. And there's more Republican opposition to that, which is why the idea has been brought forward to bundle it with Israel aid, which Republicans support. And another winner in Congress is aid to Taiwan, more military aid to Taiwan. So if the three get bunched into one legislation, it's highly likely it would pass, and highly likely it would pass regardless of the cost.
Okay, Ross. Always good to talk to you. Thank you very much indeed for that. That's Ross Feingold, who's Business Development Director at SafePro Group over in Taipei.
You're listening to Peter Lewis's Money Talk.
Money Talk.
Thank you very much for listening this morning. Don't forget to take a look at my daily newsletter, which is at peterlewismoneytalk.substack.com. On tomorrow's show, I'm joined by Francis Lunn, the CEO of Genius Securities, and Andrew Sullivan, founder of Asian Market Sense. With a view from Australia is Toby Lawson, CEO at Staten Partners. Please join me again tomorrow.
Money Talk.